Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey everybody, welcome back to the Investing Podcast presented by Tusk Media. I am Andrew Hall. Joining me today, Benjamin Nye. Ben, how are you?
I'm doing very well.
Good, good. Real quick, go to iTunes, everybody. Search Tusk Media. You'll find our podcast there in audio form. Download that, hit subscribe. Most everything we do now is really on video, but we've got a couple audio-only interviews that we're working on ironing out. So be sure to check those out. We're going to go ahead and jump right in, though, and talk at the topic on hand today, which is Apple. Apple released earnings on Tuesday, May 2nd. Been leading off right off the bat, everybody always pays a lot of attention to Apple's earnings, maybe not so much for this quarter within the year because of the lack of iPhone data, so to speak, which we'll get to a little bit later with the upgrade cycle and all that. But what were the major headlines? Good news, bad news, neutral news? What really stood out?
EPS beat by a little bit. They hit $2.10. Estimate was $2.02. Revenue missed by a hair, $52.9 billion. Estimate was $53.1 billion. But then you look at some of the other benchmark levels that they like to use, and iPhone units sold were 50.8 million. Estimate was 51.4 million, so that was a miss of 600,000 on the iPhones. Important to caveat that by saying that there was 1.2 million that was taken out of channel inventory. So you strip that back out, and all of a sudden Apple's quarter looks a lot better. That's the argument Tim Cook wants to make. Average selling price underperformed a little bit, hit 655, estimate was 666. Probably didn't want to hit that number anyway.
Yeah. Ominous.
Yeah, but the next quarter's revenue guidance was a little bit soft. Apple tends to guide that way, not as egregiously as they did in the past before they give a range, and if they weren't dramatically over that it would be bad. But in this circumstance, they hit $43.5 to $45.5 billion. Just think about that for a minute. Like $44 billion in a quarter.
It's 90 days.
Estimate was $45.7 billion. Gross margin was about in line, 37.5%, 38.5%. Sell side estimate was 38.3%. Some people are saying that the buy side was a little underneath. Katie Huberty of Morgan Stanley was saying that. So not a bad quarter from Apple. The focus is, as we'll talk about, on events still to come in 2017.
Kind of a non-exciting quarter for Apple, and I think in some regards that's one of the challenges with this company. When you have what many call the greatest product of all time in the iPhone, and you have a company that's making $500 million in sales a day.
Yeah.
When you have a company like that, it's easy to kind of overlook how much they're actually achieving. But not much of movement on the stock either. Stock's down less than 0.5%, trading around $146 as we talk about this. It's in the afternoon on April 3rd. Or May 3rd, excuse me. So kind of maybe a lackluster quarter, but not a bad one in any measure necessarily. One thing I want to touch on, obviously, is going to be iPhones and the upgrade cycle that's coming up and what that may look like, both in terms of volume as well as the price per unit. But talking about other sources of revenue, in particular in the Mac space, what are some storylines and some things that really stood out to you, Ben?
Well, the storylines on the Mac, so if you look at the numbers specifically, Mac was down. Actually, Mac was up 4% year over year, which was a strong move. That's comping over a period, though, where they were down, looks like 12% is the numbers that I have. So relatively easy comp. More on the qualitative side is some of the other news that we're getting out. I read a report that says Chromebook is now the notebook of choice in schools and in grade schools. That's contrast to where Macs were the go-to. You think back when I was going to school, everyone was having Macs and using the Macs, and part of that was really Apple's emphasis on get them hooked early on this operating system, and then they'll be purchasers later on. That's not so much the case now. You got the Chromebook, and then you have Microsoft. which yesterday came out with their $999 Surface laptop. It's interesting to see that strategy from Microsoft evolve from, under Bill Gates saying everything has to be software. That's where our competitive advantage is, to something that's more integrated and competing more directly with Apple now. So there's more competition coming. I think that the general consensus is that Microsoft has at least partially improved, and Apple's hasn't really improved that much. So you have some more competition in that space, and in general, that's something I think that they need to reaccelerate.
Mm-hmm. Yeah, the Surface, in some regards, it seems like the first iterations of the Surface that came out from Microsoft are almost kind of laughable.
Yeah.
It seems so gimmicky, kind of this idea of almost a hybrid tablet versus a laptop. It seemed very gimmicky. They always were very colorful, things like that. But it does seem like that's a product that's come a long way. They certainly have, I would argue, pretty powerful advertising partners, whether it's things like the NFL, where you see those things all over the sideline, things like that. They pay a decent amount of money to get those rights, but definitely seems like they're out there a good bit more. Obviously, the big story with Apple, though, as always, is going to be the iPhone again. A lot of people call it the best product of all time. It's kind of hard to argue with it when you look at the sales numbers and you look at what it does consistently. With that regard, Sam Frost and I were actually talking yesterday, and it seemed like kind of the narrative around the iPhone, it's kind of the same this time of year every year. Mm-hmm. You look at what's sold over Christmas, you look at what's sold with kind of that late summer, early fall upgrade cycle, all that good stuff, and then you kind of hit a little bit of a lull, with the expectation that, hey, we're going to have new products coming out, so we can just wait kind of a couple more months, which I do think has a very real, very psychological impact on everyday consumers. I know a lot of people, myself included, who have said, oh, I could technically upgrade now, but let's wait a couple more months and really wait it out for this. What are you expecting, and what are kind of the themes of the next upgrade cycle with the iPhone?
So if you take a step back and you look at what the iPhone has been doing, trailing 12 months iPhone sales is 215 million, which sounds like a huge number. But that's still well off the peak from the trailing 12 months that ended in December 2015, which was 232 million. So we have a little ways to get back there, and the hope is that this next iPhone upgrade cycle with the iPhone, presumably iPhone 8, is going to be on the same magnitude as the iPhone 6, the iPhone 6s upgrade cycle. The question is, does that actually come to fruition? I think that's still very up in the air. I think over the last few months with the run-up in Apple stock, I think the consensus has gradually moved to we're at peak iPhone, moved from that to wait until the next upgrade cycle. And there's a psychological shift that occurred. But what we're seeing is iPhones are actually, they were down 1% year over year. Tim Cook, in the conference call, said, and I quote, in general, what we're seeing what we believe to be a pause in purchases on iPhone, which we believe are due to the earlier and much more frequent reports about future iPhones. And so that part is clearly going on, and it could be behind what's behind the data. I don't know, but we are seeing that in full transparency. Thanks for the question. I don't think anyone who knows that there's going to be a new iPhone this year didn't think there was going to be a new iPhone last year.
It's not a new pattern.
It's not a new pattern for Apple. So I don't really buy that argument from Tim Cook. I think that people are getting savvy to the fact that, yes, every September the prices for the old model drop, and there's a new model if you want to buy the cutting edge. So the return on investment of buying an iPhone in January, February, March, all the way up through September is not very strong. So I think Apple is battling that a little bit, but then I also have reservations that people feel the urgency to upgrade in September or October or whenever the next phone comes out.
Yeah, I think the other thing you have, in some regards, working against them is, let's just be upfront about it. The next iPhone is going to be the best iPhone yet.
Yeah.
Apple will say that. We'll accept that. But you get to a point where, you know, the hockey stick in terms of technological innovation and improvement over the previous model gets to where, although it may be vast from an engineer's perspective or from some of the people that are actually coming up with these patented technologies, although that may be vast, it's not that discernible to everyday human beings. And you start to look at potential features, and there's, you know, thousands of different blogs you can read that have, you know, leaked ideas from the iPhone. Oh, here's what the patents say. Here's what they're trying to get. You can find all that stuff from somewhere else. We're not going to sit here and speculate on things we'd like to see on the iPhone. But that'd be another great podcast, I'm sure. But you get to a point where those like improvements are less and less discernible. So you have that kind of, in some regards, working against Apple. The idea of, hey, is this going to be, you know, one of the things when they actually introduced the Plus, which was a new size phone. Okay, I get it. That makes sense that you're actually seeing people that want something somewhat different. So that remains to be seen how they kind of capitalize with an upgrade cycle that can actually have something that's so uniquely qualifying as a vast improvement over a previous product.
And some of the things that was being speculated upon at the next iPhone cycle, I don't think people really get. This 3D sensing, which has been all over the news, you know, it's so that the camera can sense, you know, depth.
Right.
And I don't...
The camera upgrades mean nothing.
And I don't understand the practical implications of that. If an iPhone can sense how far you are away from the phone and how you can control it with gestures, I mean, I guess that's cool, but I don't know what it actually does. I think it needs to demonstrate value. Because when I think about the iPhone, when I talk to people about the iPhone, the primary thing that people want to improve, to see improved on the iPhone, is memory. And there's only one way to do that, and that's just to increase the amount of DRAM that you put in. And DRAM prices, as we talk about, just continue to go higher.
Speaking of pricing, Apple being pretty aggressive in what they hope the new iPhones will sell for. That coincides, and we talked a little bit about this. I can't remember if it was on the podcast or if it was just in a conversation, but we've talked a little bit about kind of the new way most of the phone companies, AT&T, Verizon, et cetera, may be actually, you know, providing phones. No longer is it just a subsidized free phone with a 2-year contract. Now it's usually built into your monthly bill. They're pushing more and more to kind of that subscriber type model, even for the product that you have. Apple, you know, a lot of people are looking at $1,000 per unit target. Is that achievable? And will that do more harm than good? In some regards, you know, you wonder if we're looking at, you know, can't even get to the high 600s, or we're flirting with the high 600s and we're seeing numbers dip. Seems like the jump up another 50% from where they are could really be detrimental to the volume sold.
I think the way they do it is say that the newest, greatest iPhone is going to be $650 or $700 or wherever the prices have started. But if you actually want something that's going to be able to store all of the memory, then you're going to have to buy the extra memory for another $100, $150. If you want a bigger screen, you're going to spend another $150. And I think they're going to continue to ratchet up that differentiation to the upside. So sometimes when you see companies do this, they segment it out and go lower and lower and lower, which is what you're seeing with Tesla. They came out with a Model S, and now they're coming out with a lower version Model 3. What Apple is, I think they're doing, is going up in value. And I don't know if the consumer is going to be receptive to that. Maybe they'll have a gold iPhone or like I don't know, some type of iPhone that really captures people's imagination.
It seems like that puts an awful lot of onus on your sales force, which more or less becomes your AT&T service reps, the people that are dealing with the long line of customers. Their ability to say, hey, well, it's only X dollars a month if you want to throw it on to get this upgraded model. I mean, I think that becomes, you know, incredibly important to, you know, really see how that phases in.
I think if you look at Apple more broadly, what investors would like to see is them really pursue more of a razor blade model. So yes, I mean, they have a phenomenally profitable product in the iPhone, and that's great, and continue to make that profit on the iPhone. But you also have the services business, so use that phone and that ecosystem to sell high margin services. And the problem is they're not doing that much. The year-over-year service revenue is about 20%. Which is good growth, but it's less than what Google is growing. its Division F, and Google's grown from a much higher base. Apple Pay hasn't really taken off. There's a lot of competition. I mean, with Venmo. I mean, I don't know how Apple did not get into that space before Venmo. There's rumors that they're trying to do it, but that first mover advantage, I think, for Venmo is now sufficiently ingrained enough that it's going to be. And then you talk about the other services they provide, like the health services and the iTunes store, and you know those are strong than Apple Music, but they're not showing explosive, accelerating growth, which I think they need to see.
And I think it's, we're far enough removed now to say, like, Apple giving up ground on the music space specifically was just a categorical failure, to allow the Spotifys of the world to come in and displace them, or the Pandora Premium, the subscription model for, all of those, what was it, Tidal, that's Jay-Z and Kanye West, like to allow that to happen right under your nose when you had such a huge advantage both in the catalog of artists as well as the first mover advantage on, hey, you pay for what you consume, to allow them to come in with a subscription model right under you was just a huge mess.
Right, and I mean, you talk about other services too, like the map service, Uber. Yeah, all these other products that use Apple in order to augment their and enable their business model. Apple's pretty pleased that it's there enabling it, but Samsung could enable it too. And I think that's a bit of an indictment against Tim Cook and the strategy that he's pursued over at Apple.
Well, there we go. Any other thoughts on Apple on the quarter?
I'm interested to see. I think it's probably going to be in a holding pattern. There'll be estimates about the build rates and stuff for the new iPhone, and there'll probably be some things about delays and with the glass, like they don't have the glass or have more iPhones breaking, but that happens every single year. So just I struggle to see the near-term upside catalyst.
Yeah, it's kind of, one of the analysts that we saw some comments from said basically hit the snooze button until the next upgrade cycle. And I don't think that's a terrible approach. Obviously, Apple's going to be a huge read-through for what the market's doing, how it's responding, but it's hard to picture. It's hard to really make a call on doing much more than market weighting in some regards with Apple. I mean, it's had a huge run. If people are right on that chain of thinking that, hey, next upgrade cycle is massive and it can continue to go, but we're probably not going to see a whole lot of movement, it doesn't seem like. This is the Investing Podcast. Thanks for being here.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are our professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.